Strike Money Analytics and India Charts as well to help us decode the market construct further. Now, Rohit, we have already crossed that 25,200 mark. So what are the next key support and resistance levels that you're tracking for the Nifty and Nifty Bank as well, before we talk about further sectors?
Yeah.
Important levels, you're right. Of course, we're all watching just the previous highs. But if I, use some trend channels, we'll be watching 25 to 30. And once we cross 25 to 30, then we should probably accelerate towards 25,800. So that should add another 600 points from here once we get past that level. Now, as far as Bank Nifty is concerned, hopefully it manages to hold on to the gains that it is, making right now. And if it does that and we close positive, then we are set up to move towards 57,845 and 58,460. So that should also therefore add up further once we see that.
Rohit, so tell us now that, we have managed to break above those 25,200 levels. We do see, a bullish trend that's taking shape. In this market, then, what are the pockets of value? Where do you see value? What are the sectors that you're bullish on? And if there are any buy calls coming in from you, do give us that also.
So the sector that we like most and that has the best value is financials. So financials stand out right from the start of this year to date and are likely to stay in that zone for the rest of the year. So it's pretty clear that financials will be leading the way. And within financials, I would really like the NBFCs. So that is the focus area. Can't name any particular stocks, but that's the place to be. The second after that will be PSU banks, followed by private banks. So that's sort of the importance that we'll give each within the financials. But financials as a whole, I think, are going to be outperforming for the year. The second place to really consider is PSUs all over again. And when we say PSUs and we look at the PSU index, we're actually looking at a broad range of sectors that come there, because many of these stocks continue to remain in value after the recent correction, whether you go to the oil marketing, whether you go to metals, whether you go to construction or capital goods. There are a whole lot of mix within PSU, but they all have good value out there, and which is where you would again want to look at. The third one, which is the emerging sector for the year, I think is going to be metals. Metals, again, valuations are not very, very stretched. All you're looking for is the commodity cycle to kick in, and that's sort of very slowly happening. It's happening on a segment by segment basis. We've only seen maybe gold and silver do extremely well. Copper hold out. We are still not seeing a pickup maybe in things like aluminium, zinc, nickel, etc. But they are all set up to do that at some point of time. And you're starting to see early signs of that momentum, especially in oil, which had really been beaten down. We're actually starting to see some momentum come back to oil as well. So commodities, I think as a whole, which is where the metal sector comes in, should also do well in the coming year.
All right, thank you, Rohit, for that view. Commodity-facing sectors are expected to do well as per your, expectation. With that, we let you go. Thank you so much for joining us and helping us decode the market construct. Now, moving on, we have Ravinder joining us to tell us